Good afternoon, everyone. Welcome to our webinar on GST on secondment of expatriates, way forward. In fact, this is our third webinar on the very same issue because with each passing day, a lot of our clients are facing investigations, they are getting notices. So we thought that we'll have this webinar and update all the participants on latest developments on this issue, both from a legal perspective as well as departmental investigations perspective. So thank you for joining in large number. We have close to 200 registrations for this webinar, and persons from leading companies are joining this, which indicates that it's a burning issue for almost every multinational company. So in today's session, we'll give a brief background of the issue. Then what was the pre-Northern Operative jurisprudence discussion on NOS ruling. I'll refer to Northern Operative as NOS ruling. And post-NOS also, how the jurisprudence has developed. Most importantly, the current challenges faced by us. And we have got many questions while registering or through emails, etc. And very frankly, most of the issues are common only about applicability of interest, valuation, reverse charge, ITC. So we'll discuss each one of them threadbare. We'll conclude the session with the way forward. And thereafter, we'll open the forum for a live Q&A where you can raise your hand, we'll unmute you, and you can ask your question in front of everyone. So starting with the background, typical secondment transaction where a foreign entity and an Indian entity is involved. I'll refer them as FE and IE in our session. So FE sends employees on secondment basis to IE. Very importantly, while dealing with different type of clients, we came across different ways in which companies pay to them, and these payment mechanism also vary from companies to companies. In some cases, payment is done by FE. In some cases, it is done by IE. In some cases, it's a blend that IE makes payment to the employee in INR and reimburses a part to FE, which can be on account of salary, which can be on account of social security benefits. Third and very important component, IE incurs expenditure on perquisites of these employees for their accommodation, vehicle, etc. From a documentation perspective, in some companies, they have a global mobility policy to deal with secondment transactions. There are secondment agreements also. But yes, in some cases, we found that these documents are not there. And the documents like employment letter or a seconded employee coming under employment visa, FRRO compliance is being undertaken by IE. So these sort of documentation exist. From an IE perspective, compliances are done under employment laws, which can be PF and other laws, as well as income tax law. Very importantly, in all the cases where we came across, the Indian entity treats these seconded persons as employees and deducts TDS as salary under Section 192. Some common features which we found amongst most of our clients were that seconded persons come for a short tenure. Duties of seconded employee are generally towards IE. They are placed in roles like technical roles, or they are being made head of departments or directors, CEOs, MDs of IE. Very importantly, the responsibility and risk of work of seconded persons are towards IE only. The seconded persons are governed by policies of IE only, which can range from working hours, leaves, perquisites, benefits, etc. In some cases, we also found that seconded persons continues to be employee of FE during secondment period. Then another relevant factor is what will happen post-secondment. In most of the cases, we saw that there's a repatriation clause that after seconded persons stay with IE gets complete, then they are repatriated back to FE, either with FE or some other group company of FE. Now, coming to jurisprudence, before coming to NOS ruling, there were number of cases which went before SISTAT, starting with Nissim break, in which on very same secondment transactions, SISTAT held that service tax is not payable. Revenue filed appeal before Supreme Court, which was dismissed. Then we had the case of Volkswagen India, in which again tribunal held that service tax is not payable. Revenue file appeal before Supreme Court, which was dismissed for delay. So very importantly, both these rulings were rendered before NOS. So unlike these cases were mere dismissals, but NOS ruling is much more speaking and reasoned. Very important case of Komatsu India, where even though the tribunal held that service tax is not payable, but despite that, when the matter came before Supreme Court, and it came before Supreme Court after NOS ruling, so Supreme Court has admitted revenues appeal, which I see more on the positive side, that instead of blindly following NOS ruling, I assume Supreme Court would have find some merits, and the matter is pending before Supreme Court. So hearing is yet to take place. So one relevant point I want to highlight for Komatsu is that with NOS, it's not the case that issue is totally closed. Komatsu matter is still pending. Let's hope for the best. In a most pessimistic scenario, the Supreme Court may still follow NOS ruling at the time of detailed hearing. But yes, there is a other side also which is possible, that Supreme Court may actually consider relevant facts, relevant law, and may take a different view. Now coming to NOS ruling, so briefly coming to the facts, and even though we have been discussing in our earlier webinars, but in our view, it's relevant to discuss the relevant facts, because NOS ruling had a very peculiar facts, which in my view does not apply to most of our clients, most of you, etc. So the facts were that the seconded persons were providing back office support services to FE. So unlike most of the secondment arrangements where seconded persons work at a leadership, director, or head of department role in IE, in this case, whatever seconded persons came to IE, they in turn were used for providing back office support services to FE. The deputation was for a specific duration and tasks. Very importantly, in this case, the salary of seconded employees was fixed in a foreign currency, and they were also being paid a hardship allowance because of relocating to India, which is typically not the case for most of us. In this case, the seconded persons continued their employment with FE for social security benefits purposes. But yes, other employment terms and conditions ceased with FE. So Supreme Court in the service tax regime, they held that this will amount to provision of manpower supply services to IE. The main emphasis which NOS was raising that the direction and control lied with IE. The Supreme Court negatived that. They said in the overall facts and even otherwise also, they felt that the direction and control may not be determinative criteria for employment. So they did not rule out what will be the relevant criteria, but in these facts, they held that it will amount to manpower supply services and not employment. They held that IE is liable to pay service tax under RCM. Very importantly, when NOS raised the point of revenue neutrality, that suppose in the relevant period, I would have treated as an import of service, I would have paid service tax and taken credit of that. The entire transaction would have been revenue neutral. So neither I am gaining nor government is losing. This argument was specifically negative. So the Supreme Court held that we are not concerned with availability of ITC. Once tax is payable, you should pay the tax. We are not concerned as to what will happen thereafter. They also held that extended period is not invocable, or because there were no fraud, suppression, etc., which was done because there were tribunal rulings in favor. And even this extended period observation will be relevant in GST regime, which we'll discuss in next few minutes. Now, when the NOS ruling, we felt and we still believe that it was rendered in specific facts. And we were hoping that when subsequent matters, either in service tax or GST regime, will came up before tribunals or courts, etc. So tribunals and courts will take cognizance of actual facts, and basis that they will lay down correct legal proposition. But unfortunately, after NOS ruling, there were 3 instances where the matters came before tribunal, all in case of service tax regime only. And tribunal consistently, and if I say blindly followed NOS ruling. So tribunal clearly held that, oh, it's a secondment transaction. They did not went into the facts of these cases. They did not went into peculiar facts which were there in case of NOS, and held that service tax is payable, starting with Dell, in which they upheld the demand. Then in case of Boeing India, when similar issue came up, they held that service tax is payable. Apart from that, they also held that if IE is incurring expenses on perquisites for these seconded persons, which can be in the form of a rent-free accommodation, vehicle, etc., that will also be includable. Very important aspect to keep in mind. In case of Renault Nissan, again, apart from upholding service tax demand, they also held that service tax will also be payable on amount which is directly paid to the employees. So apart from upholding demand on the amount remitted to FE, they also held that whatever IE is paying in INR to these seconded persons within India, that will also be exigible to service tax. They, similar to Boeing, upheld levy of service tax on perquisites as well. So moving ahead, be it NOS or subsequent rulings following that, in our view, still they have not considered the following factors. But yes, the rulings which are rendered prior to NOS duly considered these factors. And why we are highlighting this is, in our view, be it the Komatsu matter or other cases which will come up in future, these are the particular points which taxpayers should argue before the authorities, tribunals, and courts. That employment compliances were undertaken by IE. So IE was treating these seconded persons as employees. Even employment regulatory authorities, be it PF department, etc., they were also treating these people as employees only. Concept of dual or joint employment, that for limited purpose of uh, another factor which was not considered in NOS was that the seconded persons reported and they were responsible only to IE. They disregarded that IE had a right to accept or reject seconded employees, that which persons they want to be coming in their company or not. And lastly, jurisprudence under other laws like income tax, etc. Now, briefly discussing income tax jurisprudence, and I'll really caveat that we are not a specialist in direct tax laws, but yes, whatever we could study, research, etc. So, starting with Flipkart Internet, which is a Karnataka High Court ruling, which was the first direct tax ruling which considered NOS. So, in this case, the facts were that IE was issuing appointment letter to seconded persons. IE had right to terminate them. Persons were reporting to IE only. Income tax and PF compliance was done by IE, and IE was making cost to cost reimbursement to FE. So, in these set of facts, the High Court distinguished NOS ruling. They held that the relationship of employee with FE post secondment not relevant. Yes, there was one distinction, because this was a case where department was raising a demand on the TS perspective. Concept of make available is different from service. Therefore, we are not treating it as a provision of service. Similarly, in the recent ITAT Bangalore ruling of Google, where I had control and supervision over employees, there was no employment guarantee which was given by FE. Again, income tax and PF compliance was done by IE, and cost to cost reimbursement was taking place from IE perspective. So the ITAT Bangalore, they relied on Flipkart Internet. They held that FE only facilitated payments in overseas, and therefore it is not a fee for technical services. Now, most important part, which is the current challenges, which I assume all of you will be interested in. So we did couple of polls before this session. So first question which we asked was that if can a taxpayer adopt nominal value under second proviso to Rule 28 for paying GST on secondment when transaction value is available? So these were the poll results. So 65% participants said yes, and remaining 35% said no, or they were not sure. So the first issue which we'll be discussing from a present perspective is valuation. So let's assume that Supreme Court ruling is correct and GST is payable. Then what will be the value? If Supreme Court ruling is correct, that means that FE has provided services to IE. Therefore, in our view, there'll be three elements which will be subject to GST. First, any amount which IE is paying to seconded employee in India. And why we say so is that if this transaction is treated as a service, it means I was not contractually liable to pay any amount to the seconded person, but because FE is providing services to me, therefore, whatever amount I am paying to this seconded person is on account of FE only. So the first element will be whatever amounts are being paid to seconded person. Secondly, for sure, whatever amount is remitted to FE. Third, whatever amount is spent for perquisites, because again, if these are treated as service contracts and I'm contractually incurring certain amounts for their stay, etc., then these amounts will also be included. So on all these three elements, GST is payable. And as we discussed, in case of Boeing, as well as Renault Nissan, uh, they specifically held in one of the ruling that amount paid to seconded employees exigible to GST. In both the rulings, they held that even perquisites will be added. So in our view, legally, if assuming this ruling is correct, then all these three elements will be subject to GST. The only exclusion will be the TDS amount if it is separately deposited. But yes, because in all these transactions, the amounts are grossed up. So there will not be any separate consideration for TDS. And secondly, whatever payments are made by IE under agreement, if the agreements itself clearly said that these amounts have to be incurred by IE, we can say that these are conditions of contract only, and those can be excluded. Now, coming to Rule 28 proviso issue. So Rule 28 deals with value supply between related persons, in which the main provision says that open market value will be the assessable value. And because these are reverse charge transactions, so IE needs to determine the value on which GST is payable. Very importantly, the second proviso says that where recipient is eligible for full ITC, invoice value will be deemed as OMV. So in our view, the second proviso squarely applies to the instant situation, because unless IE is an exempted business, etc., most of our clients, they are in the taxable business. So they are in a situation where recipient is eligible for full ITC. So in these cases, we can clearly say that invoice value will be deemed as OMV. So the poll question which we raised, that in our view, despite actual value being available, so say for example, I had one seconded person to whom I'm paying, say, 1 crore in a year, say all these three elements, total is 1 crore. In our view, second proviso is still applicable, and we can say that I can adopt even 100 rupees as the assessable value for payment of GST. And in our view, that will be a sufficient compliance. So just keep in mind this point, because I think ITC availability is still more easier part. But in most of the cases, if we end up paying taxes for the past, then there will be a liability of interest also. So if we can reduce our basic tax amount by applying second proviso, then consequent interest liability will also reduce. It's also relevant to refer to recent circular number 199, even though it was issued in context of ISD versus cross charge, which generally happens within the same entity, or like in GST law terms, distinct persons. But couple of points are relevant. So the circular also clearly acknowledged and accepted that tax payment can be done on a notional value, which supports our point of second proviso. So another point which circular made was that if a company has not done cross charge for employee cost, or it had done cross charge for third party services but not included employee cost, then that value can be nil. In our view, technically, it will be incorrect to say that the value is nil. But yes, in that context, it was correct, because the employee belongs to the company only, not to a particular registration. But yes, in our view, we cannot adopt that part of the circular to say that the value of secondment transaction itself becomes nil, because we are dealing with different legal entities. Now, coming to the ITC aspect, the second poll question which we raised was, can taxpayer avail ITC of GST paid under protest on secondment issue? So again, close to 2/3 participants said that ITC will be available, and rest of the participants said no, or they were not sure. So coming to ITC, there are primarily 4 issues or questions which our clients are juggling with, starting with document to avail ITC. So in pre-GST regime, wherever tax was paid subsequently or like reverse charge taxes, etc., there were clear documents which were prescribed, either a challan evidencing payment of service tax or a supplementary invoice definition which included such challans. In GST, there is no such document. So in our view, the relevant document will be a normal reverse charge document, which will be a self-invoice in case of RCM transactions. So the relevant document will be the self-invoice, which IE itself has to raise to claim ITC. The second question which many of you raised or may have is time limit to avail ITC. So say, for example, from 2017-18 to 2021-22, I pay GST now. So can I avail ITC or not? So in our view, section 16(4), which determines timeline for claiming ITC, links timeline with date of invoice or debit note. So because we are making tax payment now, because the self-invoice will be raised in today's date. Therefore, in our view, if the tax is being paid and the self-invoice is being raised in 2023-24, so you can avail credit till 30th November 24 comfortably. Even though there was a delay in payment of tax, let's assume that still section 16(4) does not link ITC with the date on which invoice ought to have been raised. So the law is very clear. It's the date of invoice. So if date of invoice is today, then ITC will be available. Someone can say that there can be a penalty for delaying raising of invoice, which let's assume that yes, it's payable, but that will not at all affect entitlement to avail ITC. This is also supported by jurisprudence under pre-GST laws that date of document and not date on which document ought to have been issued is relevant. Third question is, will ITC be available if tax paid under protest? In our view, yes, there is no bar, because as of now, whichever way you'll pay the tax, either through DRC3 or through 3B, etc., you are paying it as tax only. There is ample jurisprudence under pre-GST laws which says that ITC will be available even if tax is paid under protest. Last but not least, can department invoke section 17(5) to say that the company has paid tax under section 74 and credit is not available? In our view, even if these payments are made, these are not on account of fraud, suppression, etc. Therefore, section 74 bar does not apply. And in our view, for all these reasons, ITC will be available. Now, another set of questions which we often come across is on the manner of payment of tax, where department is insisting on payment via DRC03. In our view, GST 3B is a preferred option so that these reconciliations for monthly returns, annual returns are easier. But notwithstanding that, even if you are making payment under DRC03, ITC will be available. So as long it is not paid under section 74, we can claim ITC. Coming to interest implications, in our view, interest will not be payable if you pay tax under protest, because when you pay tax under protest, we always recommend that you should file a detailed legal letter with the department that these are the 5 or 10 reasons because of which NOS ruling does not apply. And therefore, if in future you succeed in those arguments before tribunal or courts, then interest will not be payable. In any case, there is no compounded interest in GST law. So if you're paying tax now, the interest liability gets fixed today only. So from that perspective, we don't see any rationale for paying interest now. So we always recommend our clients that they should pay tax under protest, file a detailed protest letter with authorities, reasoning out as to why NOS ruling is not applicable. And this will duly help them under direct tax laws also, because many of our clients are now facing direct tax litigations on two grounds. One, department is saying that the foreign company has a permanent establishment in India because so many people, foreign companies deputing here. And secondly, they are raising that it's a fee for technical services, so withholding tax should apply. The last slide on this section is you should keep in mind what is the last date by which when department can issue show cause notice. So in this table, we are telling you two dates: normal period, section 73, extended period, which is relevant for fraud suppression cases. In our view, these are cases which should fall under section 73. For 1718, it is September 30th, 2023. So yes, department has less than 2 weeks to close these proceedings. Under section 74, yes, they can raise show cause notice till July 2024. But in our view, if they issue show cause notice under 74, we can very well fight that there was no fraud suppression, the legal position tilted more in favor of taxpayers, etc. Similarly, 1819, 73 time limit will expire in December 23, 1920, it will expire in March 24, and so on. So coming to the last part of our presentation, which is the way forward. So one, we recommend that, I assume that most of you would have already done, but if not done, you assess underlying arrangements as to whether NOS applies or not. In my view, there can still be cases where NOS is not at all applicable. Say there is no global mobility agreement, there is no secondment agreement with a foreign company, you are directly dealing with the employee, so there are no payments which are being made to the foreign entity, etc. So assess those arrangements. For the past, because we saw that post NOS Supreme Court ruling is blindly applied by tribunals and service tax demands are upheld. So if after assessing your current arrangements, if you come to conclusion that it's a 50-50 case, you should consider payment of GST under protest, both for protecting interest liability and direct tax position. You can surely claim ITC of that. And yes, for interest, penalties, etc., you can litigate. You should surely align your position with income tax laws and strategize for future, that going forward you want to litigate this issue or you want to pay on a regular basis after duly lodging protest with the authorities. So with this, we come to end of today's session. So thank you very much for joining in large number, and we'll come back to you with another webinar soon.